What is going on, everybody? Welcome back to the second episode of our VIP Weekly Signals Recaps. Before we get into today's video, I want to quickly give you guys a little heads up. I am wearing my Invisalign. I just got it earlier this week. So I want you guys to know that if you hear any slurs, any lisps, any out of the ordinary speeches throughout this video, it is because I'm wearing an Invisalign and I cannot control it. So I want you guys to just bear with me here. I'm going to try and minimize it as much as possible, but if I cannot, you guys are just going to have to put up with it through the video. But nonetheless, we're going to get into breaking down these trades from this past week. It was a very slow week. Not a lot of moves, a lot of limit orders coming out because the prices were not in the areas I wanted them to be. But nonetheless, we walked away with a lot of profit. We had a huge gold buy. You guys can see on the right here, we had a huge gold buy, so we're going to get into that right away. But I want you guys to do two things once again. I want you guys to DM me if you have any feedback or if you want to see anything in the future videos. And as well as that, I want you guys to be taking notes. These videos are to help you guys out as much as possible, and they are not for me at the end of the day. I'm making these videos for you guys, and I want you guys to capitalize on as much info as possible. So again, we're going to get into these breakdowns. We're going to go over my personal analysis and where I think these trades are going in the upcoming week. So with that said, I hope you guys take care and enjoy the video. Alright everybody, jumping right into the gold trade from earlier in the week, we have to identify two key areas of importance. We have to identify the peak high and the peak low formation. The peak high coming in at about 1921 and the peak low coming in at about 1873. Now, these areas are very important because they identify two things. They identify the peak high, which is the goal for our signaled trade, as well as the peak low, which would relatively be our stop loss placement depending on the entry price. So with that said, off of the M-top formation from the peak high, we had the market dump off with a temporary area of confusion before a further dump off to peak low 1872. So off the peak low, we had an uptrend channel form, as well as the accumulation phase forming inside while respecting the uptrend. With that said, the resistance zone inside the accumulation phase came off of a previous support zone, as well as the floor or the support for the accumulation phase came off of previous price actions support. Now, with this area of accumulation, we had two touches to the resistance as well as a third which broke out, followed by a retracement pattern that respected the uptrend channel. The temporary and initial breakout pattern, you guys need to keep in mind you cannot be trading the initial breakout. You have to wait for the retracement. So once I saw the initial breakout, I waited for the retracement to take place, which completely respected the uptrend channel, followed by two candles that did absolutely nothing. Those two candles told me that the market was resting inside that zone, looking to break out above because the second bearish candle also respected the uptrend channel. I waited for the market to play a little bit below the uptrend channel. This was faking out the sellers, getting them to enter into sell positions. The market maker was just trying to grab more selling orders. Once the market moved back above, I entered just about halfway inside this engulfing candle. Once the engulfing candle closed, that gave me the green light. This trade was about to take off completely. Once the market took off, we had two areas I had to look out for. These two areas were zones of resistance. The first one being a confusion zone where the market just rested off for a little bit. Market moved completely through that with three immediate vector candles and then temporarily pulling back after approaching the newfound resistance off of the previous support. The previous support had an area where the market retraced, got more buy orders, faked out the sellers, getting them into impulsive sell positions, making them think that the market's going to move back below. The market completely moved back into a bullish manner after touching off in the area of confusion, smacking our take profit, giving us about 320 pips total. I personally closed out at about 300 pips. I notified the signals channel I wanted to get out because I was not too sure if the market was going to play off and actually approach the 1921 zone. I was completely wrong. The market smashed the 1921 zone, retraced again, and is looking to take off even further. But nonetheless, we earned back the 60 pips we lost from the trades earlier in the week, and we profited at about 240 pips minimum. So again, this was a very well executed trade. The way I could have played this trade a little bit better was to enter into a lower position along the actual uptrend channel. However, again, I do not like entering along the uptrend channel. It's a little bit too murky water for me. I want to get into the clear waters. I want to get in at a nice prime entry. But nonetheless, again, a beautiful trade off of an uptrend breakup pattern. Right now, we're going to get into the next breakdown. Jumping right into this EUR AUD trade, I want to point out immediately that this trade did hit our stop losses. This is one of the 2 trades this week that hit our stop loss, and it could have easily been avoided if I had acknowledged the fact that this trade was in a sell-off opportunity. Now, the reason I did not recognize that this was a sell-off opportunity is because prior to this, I had acknowledged a support zone that was very, very respected earlier in the trades, although that did not play out as the trade actually was placed. But just above that zone, we had an area of resistance. I entered into the buy position. The trade came up into small profit, approached that resistance zone that I did not acknowledge earlier, and sold off immediately. Trade reversed once more off of a lower support zone, as you can see here, right at about 163.90. Reversed back up, hit that resistance once more after going into small profit once again, sold off even further, hit our stop loss, reversed back up to our entry price, and now that entry price, former support, is now new resistance. Sold off once more and is now sitting at a nice 163.32. So very, very simple, very easy to spot mistakes, something that I should keep in mind going forward. And this is something that I do on a regular basis. I always identify the charts as both a sell and a buy, and it's something that I failed to do for this trade specifically. So again, I need to be more aware of identifying both buys and sells opportunities. That's a very, very easy trick you can implement into your trading plan to make sure you're getting on the most profitable side. But with that said, this is a very short trade breakdown. It's a very simple trade breakdown. It's a very easy to spot mistake, and it's something that I need to keep in mind and you guys need to keep in mind as well moving forward. So with that said, let's jump right into the next trade breakdown. Jumping right into this GBP JPY breakdown, we did enter into a sell position based off of a resistance and downtrend formation. After we exited the trade with small profit at about 15 pips, the trade did break above that downtrend formation, acting as new support, and did evidently hit our stop loss. However, again, we were outside of this trade. We closed with about 15 pips profit, and the analysis going into this actual trade was based off of a resistance zone, followed by a peak high at about 137.44 at the time, as well as a temporary area of resistance. Now, this resistance zone did form below the entry price as the price did start to retrace. So to break it down specifically, trade entered into the sell, trade moved down, reversed back up, forming that area of temporary resistance, 1, 2, 3 touches before the market moved above. We did close out just around here. Market moved back into entry price, went to a bit of a drawdown before reversing back below once again, but the market did not hold the sell opportunity and moved into the buying position. So the area of support formed right about there. Market moved above, hitting our stop loss. So again, this was a trade based off of resistance and downtrend formation. However, it did not play out the way entirely expected. The trade did move, as I mentioned earlier, into a bullish opportunity, and the buyers did begin to gain momentum. So I do believe that this was the overall playout of the market, forming a long-term uptrend formation. However, we were on the selling position and did close in minimal profit. So again, overall market was an uptrend formation. I identified the downtrend, and it looks to have formed a wedge formation, forming the breakout opportunity for the buyers. So again, something I missed out on. It's a mistake going forward. I did not play into an actual mistake here. We did not lose any pips. I got out when I saw the tides turning, and that's all I can really say about that moving forward. So we're going to jump right into the next trade breakdown. Getting into the last trade of this short weekly recap, I want to quickly point out this EUR GBP loss we took from earlier in the week. It was a 20 pip loss, a very short loss, but a loss nonetheless. And I wanted to quickly go into a short breakdown as to why exactly I took the buy opportunity. I immediately noticed an uptrending channel followed by an area of temporary support. However, this area of temporary support turned out to be an area of consistent resistance, which I failed to acknowledge going into the actual trade's execution, and I decided to get into a buy opportunity on the other end. Now, just above my entry price, I had also noticed an area of consistent resistance. This is after the trade had already passed, so I was a little too late to notice it because it had been triggered several times before. Once I'd actually gone into the buy opportunity, the market broke below the uptrending channel and decided to react to the original support zone as new resistance. So the trade immediately sold off and had spiked our stop loss, reversing up once again to that secondary resistance zone that I'd pointed out a little earlier, and sold off once more. So that completely voids out my buy opportunity and confirms that I had missed out on the selling pressure. So going into the next week's trade, I want to look at a buy opportunity on EUR GBP once again. Hopefully in a lower zone. I want to earn back those pips that we had temporarily lost. But that's going to wrap up this week's video. It was a very short weekly recap video, much shorter than the one we had in the previous weeks, but that's due to the fact that we had barely any trade opportunities. Now, I know I mentioned earlier in the video we had a lot of limit orders coming out. Those limit orders have yet to activate, and I want to get into those in next week's video once they activate, and hopefully they do. So once again, I keep repeating myself in this video, but that's going to wrap up this short weekly recap. I want you guys to be taking notes, and I hope you guys had been taking notes during this video. I want you guys to maximize the amount of information you are pulling from these videos, as that's entirely the point of this little series. So I hope you guys enjoyed the video. I hope you guys enjoy your Thanksgiving going forward, and we will see you at market open. Take care.